Hi, this is Charlie giving you Monday's market commentary. I hope you're very well. We're going to start off just by looking at discipline to start off with today, and then we'll go into the market commentary itself. Because the one thing that is either going to make or break a trader will be whether they can maintain discipline. And there's lots of factors, to be fair, that influence a trader's success or failure. But I would say the one single biggest factor that's going to make a difference is discipline. See, I'm not talking about necessarily strategies. Obviously, I just am assuming that a trader will have a number of strategies that they use. But just because you have a strategy doesn't necessarily mean that you're going to be successful, because if you don't have discipline, then you can have the best strategy in the world and you'll still be unsuccessful ultimately, because it's this sort of thing that goes on. And I just start off with a story from myself. In the past year, many years ago, Kim and I both started together in 96, 97 time, and in those early formative years I made lots of mistakes. I'm sure Kim did as well. And one of those mistakes would be, let's assume this is my equity curve, and I would do well for a period, and I'd have a really good run, and then at the point when I've just had a really good run, somewhere around here, the wheels would fall off, and my equity curve would then come back down again, and so by this stage, sorry, bear in mind also by this stage, I'd already got a couple of years under my belt, and I was already had a style of trading which suited me. So I was already at that stage, so that wasn't a problem so far as strategies type thing is concerned. But it was discipline, and so because what would happen is I'd get overconfident. And then at the point you get overconfident, you find, oh, actually, I'll just take this trade anyway. It doesn't matter, because if I take this trade, I've had all these profits lately anyway. It doesn't really matter. But then, of course, so that then brings you down to maybe here. And at this point, you're still thinking, oh, it doesn't matter, because I'm still up, really up. Okay, yeah, maybe I shouldn't have taken that trade. And then maybe you take another one because you think, oh, this market's mine. I know this is coming for me. And you take that other one, and all of a sudden you're now down to here, and so on and so forth. And you end up in this cycle until the point where, and then you have a normal range of winners and losers in there, and before you know it, you're back down to where you were. And then you get down to here, and you think, actually, if I just do what I was doing over here, and that's just go back to basics. Just put super discipline in place, and then, funnily enough, then the equity curve would start coming up again. And this equity curve, this could be a period of a few months, and then, of course, what would happen again is you get overconfident, because a few months have lapsed, you forget about all this, and all of a sudden you're overconfident again. You take those trades that you shouldn't be taking, and you're back in this cycle. And so overall, over a period of a year or so, you're looking at your equity and you're thinking, okay, well, I'm not losing any money, but I'm not really making any money either. Not consistently enough, because I give it back too often. So if you fit yourself into this bracket, you just need to have a look at what is it that's creating this. Now, there could be other factors. It may not be overconfidence. It may be that you're switching around strategies. It could be all sorts of reasons. But in the main, I find it's more of a psychological thing that is why people tend to suffer from this than anything else. So it could just be that for example, a trader is risking 100 pips per trade, and to only make 10 pips. Well, you can go for quite a long time making money like that, because if you only got 100 if you've got 100 pips at risk, a lot of the time you won't get stopped out, because you've got so much risk. You're stopped so far away compared to where your target is, that a lot of the time you won't get stopped out, and so you can go on for months and months, and then that can roll over. So again, it can come down to strategy. And so, of course, but if you're having this sort of equity curve, then something's not quite right. It could come down to your risk to reward of your strategies themselves, or it could come down to your psychology, like I was talking about. With me, years ago, it was my psychology that I would get overconfident, and then I would then bring it all back, tighten it all up, and then take it forward again. So you need to have a look at yourself. As traders, we always need to constantly monitor ourselves anyway. But you do need to have a look at yourself and see whether you fit into any of those scenarios. And because it's not just it's not just, oh, get a new strategy and that fixes it. And I know that obviously at the moment we've got a new strategy that's out, or a new product that's out, and it's great. It's really good, and for a lot of traders it will really suit them. And so but like any strategy, that strategy by itself is not going to save you if you've been going through this sort of cycle. You need to look at yourself first. Applying new strategies is great, and you can apply them into your trading, and you'll be successful with them, providing you are disciplined as a trader and you trade them correctly. So as opposed to whether you're, like I was, getting overconfident, then mucking it all up, and then having to start again, and then mucking it all up, and I'm sure there's plenty of you listening who've probably done something similar. So there you go, just a little bit on discipline there. Let's just turn the pen off. But just while we're talking about the product there, I think we've got about a week to go before we're going to put the price up on that. So for those of you that have been just waiting on finding out when we're going to put the price up, then we've got about a week. So you haven't got too long to go. So I'm just going to put this back over onto the normal indicators, and let's talk about these markets, because it is a fascinating market right now. Because just look at the Dow Jones I've started off with. On Friday, it all looked like the market was going to roll over, and I had people emailing me saying, "Oh, this market looks like it's rolling over," and they're looking at the S&P. I said, "Well, hold on a second. Not until the market closes do you know for certain if that's going to roll over." And what happened? We ended up on a hammer. So you have to be very careful, and there's a lot of pessimism out there at the moment, even though the markets they haven't rolled over that much. So it's very quickly people have got very pessimistic, and usually, I'm not saying it's going to be on this occasion necessarily, but usually that's a bullish sign actually, because when people get very pessimistic very, very quickly, it can mean that's the case. So I still think the jury's out. We've got a nice trend channel here. If we break this trend channel, then yes, we can then say, right, we're starting to get more confirmations here that there's maybe a bit of a pullback coming in. But at the moment, we're still within a nice uptrend within the trend channel. So I would not get too bearish too quick. So what are the actual warning signs? To an extent, yes, there's potential in that the Russells rolled over a little bit more, and the Nasdaq, if I can find the Nasdaq on here, where's that gone? On my watch list here, there it is. The Nasdaq's no, that's that's New Zealand dollar. That's not the Nasdaq. Where's the Nasdaq? I'm looking down my watch list here. I'm trying to see all my stocks. I've got too much on my watch list, and I can't see it. There it is. And the Nasdaq's pulled back a little bit, but the Nasdaq's been really sloppy price action for quite a long time now anyway. So I think we do have the potential, of course, and I've talked about that weakening breadth in the markets, but markets can continue with weakening breadth, and I'm just a little bit concerned that there's a little bit too many bears jumping on the bandwagon very quickly after like one down day. So let's just see how this is going to pan out. We've got the trend channel in place, and if it starts to roll over, that's when the momentum starts to change and to switch downwards. It makes things a lot easier anyway, so we don't need to call the highs or anything like that. Right, okay, so let's have a look at the currencies. Let's have a look at start off with the euro dollar. And the euro dollar, again, it put that lovely reversal day in on Thursday of last week, and then we had a follow through into Friday. Hasn't still quite hit that 50-day moving average yet, so I'm still looking for that to get hit for the euro dollar. I'm trying to remember if it's hit on eSignal. I haven't got my eSignal charts open as I'm recording this on Sunday afternoon. But again, it's had a decent enough move. Overall, I'm not entirely sure on from a medium-term direction potential at the moment for the euro. Yes, it's having a nice move up, but I really think that as it approaches this 50-day moving average, it's going to be interesting to see how the psychology of the market starts to adapt at that stage, and whether we start to see sort of more bearish news come in, and whether it's going to ultimately roll over or not. I just don't know. I'd like to see euro actually have a decent run down, actually well into the 20s. Ultimately, I'd like to see that, but I think that'd be an easier trade. But obviously, if we get above the daily 50, then I start looking on the long side again. I mean, obviously, I've been on the long side from down here. More so, I've been playing the pound. And as you know from Friday's update, I got long on the pound, and that had a really nice run. And actually it's still in a run because my target's at 153.80. I took one off because I got triggered in at 152.50 on the second increment. Let's take this down to an hourly chart anyway. And so I got in at 152.50, went on the breakout, and it had a lovely run up. And I came out of that just ahead of 153. But the main trade, which was in at 152.05, is still running. So we'll see, with a stop at 152.40 now. So we'll see how that's going to go. But yeah, so with cable, I do see the potential. It's just had a nice break above the daily 50. I see the potential for this to still potentially go higher yet. So, like I said on Friday's update, we've got the fib retracement at 154, which is the 38% retracement of this entire downwards move. So that is certainly a half decent target. So we'll see if that's going to play itself out. But at the moment, cable, I'm quite liking on the long side, and I can see more potential on the long side. Euro, you would have to argue, if cable I see that, then euro, it's a slightly different structure to its market at the moment. And if it was to decouple from cable, then we might see something completely different going on. We'll have to see. But for now, cable up, euro undecided. It is up at the moment, probably a little bit more upside, and we really need to see how it's going to react to that 50-day moving average. And then, of course, we've got the yen and the euro yen and what's going on there. And I must point out that there is a big divergence on a weekly time frame between this high, so between this high here and this high here. I think it's actually on the dollar yen as well, if I can. Yeah, the dollar yen. Oh, it looks exactly the same. Yeah. I did have it on the euro yen before. It's like they've hardly moved. Yeah. So let's turn the. Oh, there we go. That's better. Sorry. Right, dollar yen. So there's a divergence between these two peaks as well. So I like the dollar yen, and with the Bank of Japan coming out last week and saying what they've said about their bond buying, then you shouldn't fight that, and you'd have to go with the fact that it looks like this is going to continue this wonderful trend. This is on a weekly time frame here, all the way back from late last year. Wonderful trend upwards. That's going to possibly continue. However, just be wary that we have got and it's a sharp divergence at the moment up at these highs, right where we are. So just be a little bit wary that's in place. But otherwise, both euro yen, dollar yen. Yes, there's potential on the upside, but just be a bit wary at this moment. Let it sort itself out first, because there's this divergence in play, and I'd like to see that get worked off first of all. That's me finished for today. Have a fantastic few days. Kim will be back in touch on Wednesday.